Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, as I've mentioned, I'm doing my buy recommendations separately, and there's currently five or six. I've done three. I did three yesterday, and today I wanted to go over uh, healthcare, the ETF. So let's get into it. I like this. It's outside of commodities, it's outside of energy, and it's a big pattern. And the bigger the patterns, the more reliable they are. I'm missing a shoulder over here, but anyway, this is FXH. This is the First Trust Healthcare ETF, Exchange Traded Fund. It's an index fund. And so after a big move in 2015 or 16, 17, 18, 19, 20, and it got way overbought. When it gets in the green area like this, it's way overbought. It can do one of two things. It can correct downwards or it can correct sideways. This has been correcting sideways now for 4 years. And it looks like we got a breakout here. So my buy recommendation was on December 11th at 115.64, and it's kind of gone nowhere. We're at 117.23. But this pattern is suggesting if you measure from the bottom of the head to the neckline, this is like a man or woman hanging upside down. Here's the neckline. You measure from the bottom of the head of the neckline, you project that distance upward, you come up with approximately 138, which is 20% higher. So this is a monthly chart. So each one of these candlesticks, that's what they're called, represent a week of price action. So my stop is at 112, price is at 117, the price projection is 138. So my reward to risk is very favorable right here. Once prices get up here somewhere, I don't really, buying it isn't as the reward to risk is no longer as good. So I think this is the time to buy that. Let's take a closer look at this. So this is a weekly chart. Each bar represents a week of price action. So here's the left shoulder, there's the head, there's the right shoulder, here's the neckline. We had a big breakout. I didn't chase that. I don't chase on up days or up weeks. I buy on red. I buy when things are down. I sell when things go up. So here I bought, we had this big up white bar a couple of weeks ago, getting all the way up to 122. And what was I doing? I was selling some. And that's what I said on the weekly call. I said I'd be selling some of this here. And then the next week it was down, so I'm buying my shares back and I'm building my position. And then last week it was up again, up 1.33, which outperformed the S&P, so that was good. And what was I doing? I was selling a little bit. So that's kind of how I like to lower my cost basis, take some profits in, buy back at lower prices. Okay, one last chart here, and that is the point and figure chart. So, as many of you who follow me know, point and figure charts, I like them for confirmation of the more subjective charts that you just saw that I draw. This is truly just supply and demand. An X column means that prices were up during that time, and zeros represent down moves. And so it's really just supply and demand. We have a nice blue trend line, upwards sloping trend line, which is really what I'm looking for. And here, a couple of weeks ago when we got up to 120 or one close to 121, on the call, I said, on the point and figure chart, we have what's called a pole now. We have over 10 X's in a row, which on a point and figure chart tells you that it's overbought. It doesn't mean that it can't go up more, but it's telling you it's overbought. And so that was another reason. Now we've had a pullback, not a huge pullback, but we've had a pullback from 121 to 117. And so I think it's a pretty good time to be adding to that. Oops, sorry. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors and family. Have a good Sunday night and good trading to you tomorrow.